Right now, the news is dominated with headlines about the war, rising oil prices, market volatility, and it could make you feel like the market is working against you. And this is why I've put the work into building a balanced portfolio and encourage you to do the same. Because when the headlines get scary, the right mix when it comes to your portfolio will help you to stay calm, invested, and continue building. So today I'm sharing 5 buy and hold investments that I have in my portfolio. Guys, I'm struggling with a bit of a cold, so excuse my voice today. But we're going to be taking a look at Meta, Amazon, Main Street Capital, SCHD, and one of my core positions, VOO, which gives exposure to the S&P 500. All of these, I have pretty solid returns. Some I'm still building on, some I'm just holding. And if you've been with me for a while, last time around, I shared Google, which I'm up well over 100% on. So I definitely believe and see the power of buying and holding. When it comes to investing, sometimes it takes time to get that deep in profit. I'm focused on building a portfolio that can withstand the market pullbacks, these type of war tensions, inflation, whatever might come up. So let's start off with my foundational investment, which is VOO, the Vanguard S&P 500 ETF. It tracks the 500 largest U.S. companies like NVIDIA, Apple, Microsoft, Amazon, and Meta, all in one fund. Definitely a set it and forget it type of investment, an anchor, a core position when it comes to my portfolio, just like my FXAIX. It has a low expense ratio at 0.03%. Those fees really matter because they add up as your portfolio grows. And you have to think about it over 20 or 30 years. Those fees compound and eat away at your returns. I always like to highlight that. It's an investment that gives simplicity. It doesn't chase trends. It simply tracks the market, and it's weighted by the market cap of the companies. But even though it's a fund, hundreds of companies here, it is going to be impacted with what's going on right now related to these geopolitical tensions. And when it comes to VOO, current stock price $622.85 as of the time that I am recording. It's down about 1% on the day. I've been holding this one for a few years now. I currently have a little over 20 shares. My average price is $435.61, and I'm up 43%. Year to date, this fund is down 0.6% due to what's currently going on, as well as struggles that some big names have been having, like Microsoft. But as always, we have to think long term. Zooming out to the 5-year, it's up about 77%. Yes, it's a red day on the market. We're going to be taking a look at Meta and Amazon. These are 2 growth positions in my portfolio. And both of these companies have had strong market returns. Meta owns some of the largest digital platforms in the world: Facebook, Instagram, WhatsApp, Threads, and it dominates when it comes to digital advertising, and they've been investing heavily in their AI infrastructure. Year to date, it's down about 1%. Over the last year, down about 0.5%. And looking out to the last 5 years, it's up 147%. A lot of investors have panic sold during this period because of the spending, the reinvestment that they've been putting into their company. But when it comes to this position, it's one of my smallest ones when it comes to my growth stocks, and one that I want to continue adding to because I have a long-term vision of this company and things are not changing. They still have a huge user base, a dominant ad platform, strong cash flow, and so one that I want to hold on to for the future. I currently have 3.3 shares in my portfolio. I'm up about 16%. I have an average price of $563.82, and the current share price is $653. It's currently rated as a strong buy and has an average price target of $860, which would be about a 32% upside from where we are currently. Now on to Amazon, my other growth stock. Amazon is so much more than e-commerce. Most likely we see Amazon trucks on our street every day. We have a Prime subscription so that we can get our deliveries in that 1 to 2 day time span, but they also have AWS cloud computing. They're involved in digital advertising, AI infrastructure. AWS alone is one of the biggest cloud platforms in the world. It's a huge driver behind the AI revolution that's going on. This is great for investors. They have multiple streams of income. Whoops, forgot to update the screen, but Amazon on the day up just 0.2%. Current stock price, $217. Year to date, down about 6%. So this is one of those companies currently pulling down the S&P even before we ran into these war tensions because of its high weighting in the S&P. So a market mover that I use on a regular basis and plan to continue holding on to. Another one like Meta that I would love to even have a larger position in. So when it comes to Amazon, I'm currently up about 43%. I have 26.5 shares with an average price of $152.01. And analysts are also rating this one very highly as a strong buy with an average price target of $283.81, which would be about a 30% upside from where we are currently. And now I'm going to touch on two dividend-focused investments that I've added to my portfolio, starting out with SCHD, currently down 1%, share price $31. Year to date, this one is up 13.45%, which has long-term investors happy that we're finally seeing some growth along with those steady dividends. This ETF focuses on high-quality dividend companies with strong fundamentals. It screens companies based on its profitability, dividend sustainability, and a strong balance sheet. So the dividend yield is about 3 to 4%, and it also has a reasonable expense ratio at 0.06%. So zooming out to the 5-year, it's up 33%. So when it comes to dividend paying investments, you're getting that strong, steady dividend, but not the growth. And that's what I've been currently focused on when it comes to my portfolio. I'll shift to more investments like this further down the road when I'm more in that preservation stage. So when it comes to SCHD, I have a little over 57 shares. I'm currently up 22.29% with an average price of about $25.48. And now, last up, we're going to take a look at Main Street Capital, and it is a BDC, a business development company. Like many others we've taken a look at today, it's red on the day, down about 1.5%. Year to date, down 4%. Over the last years, up about 58%. So this company, as I said, a BDC, it provides financing to small and mid-sized businesses that banks often won't lend to. So I've been holding Main Street Capital in my portfolio for some time now. I built up my position along with Realty Income a few years ago. Both of them pay a monthly dividend. So every month, investors receive income just from holding this position, and they pay an additional bonus dividend on the quarter. But recently, it has been having a pullback. This is a look at it over the last 6 months. Shares have dropped about 13%, largely due to largely due to concerns across the private credit market. Some borrowers in the private lending space have defaulted on their loans, which raised fears about more of the same continuing to happen. So this has created a bit of pressure on the entire BDC sector, even companies with strong portfolios. But when it comes to Main Street Capital, they recently reported solid financial results, and only a very low percentage of their loans, about 1%, have stopped paying. So some of this pullback can be attributed to investors' sentiment around this particular sector right now. So this is a position I'm not building into, just holding. I do have the drip on, so I'm okay with adding additional shares. The current stock price is $58. My average is $42.30. I have 47.7 shares in my portfolio. I'm up 37.49%. Analysts are split on this one right now. 50% buy, 50% hold. The average price target is $68.33 and a high price target of 74. So right now we're dealing with these tensions and conflicts going on in the Middle East, leading to uncertainty when it comes to those global markets. But just like with anything that comes up, historically, the markets recover once that uncertainty stabilizes. So this is why I buy and hold and build my portfolio. Focus on my long-term plan and not the current headlines. The volatility is temporary. I've seen in my own portfolio the reward of holding and being a long-term investor. So today you see a little bit of my strategy: a core investment with VOO, growth with Meta and Amazon, and dividend focus with Main Street Capital and SCHD. So I'm going to keep on building up my portfolios when it comes to retirement as well as my taxable accounts, because I know that retirement is not an age, it's a number. So leave me some comments. Let me know, what growth positions are you working on building up? What are your favorite dividend focused investments in your portfolio? And of course, what is your go-to core position? Is it VTI, VOO? Let's chat in the comments. Make sure to like, subscribe, hit that notification bell. And you can also support the channel by becoming a channel member using my referral links from MooMoo, as well as KGU, Keen and Grace's Discord. So check those out in the description and pinned in the comments. Thanks for watching. Okay, bye.